Good afternoon and welcome to the Blue Line Metals Edge here for Tuesday, August 9th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. Not a lot of event going on today here in the markets. Got a little bit of weakness in U.S. equities, a bit of strength in the oil market. So getting this video out a little bit earlier here. Again, if you haven't subscribed and liked to our YouTube page, YouTube will send you out notification in which we uploaded a new video. Paul actually did a great video today on TD Ameritrade, made a cameo appearance on there, covered a lot of the macro markets, and it's really good to get different perspectives, different opinions. All the different guys that I work with here, we all post to this YouTube channel, so a lot of good intel on there. Looking at our website here, bluelinefutures.com, be sure to register for a free 2-week trial. Put your basic contact information in there. Select what type of report you like. We cover everything from grains, softs, FX, livestock. We give you the Morning Express, covers the macro markets, things like that. Different perspective on a lot of different things. Comes out all before the market opens. Now, looking at the report here that I wrote yesterday, shout out to a couple dozen of you guys here today trying to build out. Again, shoot me an email if you would like to receive this, or if you're not a client, you'd like to receive a couple-week trial of it and check it out. This week's focus here, again, I think there's a lot of headline number risk, specifically with the metals markets, with CPI, core CPI, again, PPI, core PPI, and then on Friday, you're going to have University of Michigan consumer sentiment and also the inflation data. So you got like 3 straight days of this inflation data, and we can all remember the unpleasant feeling of when the data had beat expectations on Friday with the jobs number. We saw the reaction here. They immediately think that the Fed's going to be more hawkish. We see yields turn up. We see the dollar turn up, and you see all these different markets head south on that news. So peeling back a lot of the gold, the silver, the platinum here today, coming in at just trying to be a little bit cautionary. Remember, gold and silver. You look at gold. Gold's still kind of fighting with that 50-day moving average. It did poke through it today. A little bit of dollar weakness. Yields were slightly higher, but I want to be a bit cautious on this, and I think that it is possible if we get that kind of more hawkish news out tomorrow or Thursday, we'll get another opportunity to re-enter gold, go out to the December contract if you're in October, and position ourselves a little bit better. Also, we could have some easy stop order placements as well, rather than trying to defend the position all the way down here, which is really uncomfortable. So breaking down some of the key takeaways here, gold yesterday gained on weaker dollar, declining treasury yields. That CPI data, I really think that it's going to come out hotter. The probable range for the S&P 500, I said 4,200. That was just a recent high here yesterday, pretty close to it. 3,400 a downside. I think we settle in between in the middle somewhere, but I definitely think that there's a big bear case going on and a big bull case that people are fighting it here. So you see some of that inflation data cool off. You could start to see the equities reinflate. So a lot of risk, both sides of things, and I really don't want to play too much with it here at the moment. So basically just going to pare back some of these positions, be a little bit more defensive. So actionable ideas of position management. The trend following system is flat. Again, it was looking to buy a breakout on gold over 1820. That is on a closing basis. So you get the close up over there, whatever the settlement, that's where it's going to go long. If you don't like buying a breakout, now many people out there, many famous traders, they were breakout traders. They buy the market when it breaks out, they try and ride that trend. You get short covering, you get all these other things. Next thing you know, it's a big trend that goes into place. So breakout trading and trading with the trend, that's always the way that I've been the most successful. Counter trend trading, that's where you get yourself in a little bit of a jam. Buying silver, silver it was at $25. When it got to $22, it looked too cheap. At $20, it got a lot cheaper. At $18, that was the pain trade. So counter trend trading is a little bit more difficult. You got to stay a little bit smaller on your position sizing. So crowding analysis here on the gold market. Remember, it was one of the shortest shorts. That was like a 3-year short. The shortest short in the last 3 years. Now we've snapped back, so you got a net position that's building back to the positive side. Moving on down, speculative positioning. Here's what one of the research notes. Speculative positioning in gold futures suggests the market is near capitulation. That was last week when it was negative. This was a research note that we put out to some people here, and has generally resulted in above average forward returns. So you see those shortest shorts in the 3 years, you want to be looking at maybe punting to the long side, looking at some call options for the snapback, which is what we saw right here in some of this action. Going down, a couple other things here. Getting into that silver market. Silver, same thing. Broke through the 50-day. If you look at today's action in the market on silver, I pulled up this chart. It's kind of backpedaling. So you're going to have the trend following system. It'll buy that breakout at the top. And then for people that want to add to the position, what we'll do is we'll reuse a reaction function. We'll reverse engineer the buy signal, and we'll get a buy-in somewhere in this area right here, with a stop again down in this area. So watch silver, could be backing and filling here at the moment. Going back to our report and scrolling down. So the trend system's long, bought at 2076. That is that high breakout. 1908 is the sell stop. I'm basing this on a 1,000-ounce silver contract, so you're going to see it's about $1,600 worth of risk. There's your settlement right here. For risk management, if you want to get ahead of it, be a little bit more aggressive on trailing a stop, you can use the risk management technique here for more active and swing traders. 1952 is where that would go in at. The crowding analysis, I did update this using the actual numbers here, but we saw a big snapback too on the crowding analysis. So a lot of short covering rally coming into that silver market. One thing I wanted to identify, gold-silver ratio shooting back up. So you're starting to see gold outperformed silver, but I think that trend could be turning here again, especially if it gets a bit of a inflation trade. You'll start to see that as well. So getting into a couple other things here, pulling up the copper market. You know, copper just sitting here. You had this big kind of cup and handle that it's forming on the charts. I'm watching it for one way or the other. I did see some of the research notes that come out. They were taking more of a short position on the copper because they do believe that you could get another breakdown in the equity markets if you get that overheated CPI data. So looking back at that report, I did outline it here. Cup and handle formation. That's this right here. Here's your handle. If you do get the breakout, you could go back up to that 50-day moving average, but I don't like this differential here on the DMI plus and minus. Seems like it's getting a little bit dicey, more like a coin toss at the moment. Coming back into it. So the actual trend following system has been short for a long, long time in copper, ever since that big breakdown. You're going to need a close over this 371 in order to neutralize it. And then from that point, I'll start publishing some of the, the actual signals that we're getting in the report. Crowding analysis, you can see that the net position is short on the copper market, and I expect it to be like that as long as there's concerns about the economy, concerns about the Chinese economy. Looking at platinum, real nice trend line coming down. We broke out to the upside, and we got this speed line coming up here. What you're going to see is if you look at today's chart, though, you're getting a pullback on that market and a breakdown. And really, if we take out this 920 level, I think we'll retest this 50-day moving average at 909. That's more or less a better entry point than where we're at. You know, your stochastics are in overbought territory. Doesn't necessarily mean it's overbought. It just means that we've had a bullish trend going upwards. It seems to be pretty firm, but that backing and filling leaves me a little bit susceptible to a correction here. Now, the trend following system had gotten long on platinum, and it bought it at 924.90. It did the October one. The protective sell stop's pretty deep down there. You need deep pockets on a trend following system, especially if you're going to ride it all the way to the sell trigger. However, you could be a bit more tactical with your risk management. Again, use those levels that we're saying right here. So if you bought 924.90, you want to either trail a stop, protect some of the profits you have right now. You should be up at least $675 from where the signal came in this morning. And then you want to put your sell stop here at 904.90, or try and just capture, $500 of it. Crowding analysis shows a short position right now in the market. I think there's still a lot of concerns about chips and things like that, how much demand that there's going to be for the platinum despite this new green energy bill coming out. We did see that Biden had signed this bill, and it is basically, it's a China competition bill to boost U.S. chip makers. I don't know how well this is going to work. We looked at some of the things coming out, like the semiconductor VanEck. When it came out, that market actually sold off a bit on that news, that particular stock. I'm not sure what it's going to do. We still got to digest it. This is relatively newer news. It was a statement that he just put out earlier here today. Again, I linked back to the YouTube video, so if you get this as a client, you can use this link to go back to it. The cycle quads, this tells you kind of a map of where the economy's at, where it's expected to go using various nowcast models. This is a growth in inflation and policy narrative. This is put out by one of our partner companies, and the source is Bloomberg. So you can see that the market's been all over the place here. This is where we're at right now. This is where all these risk assets had gone back up, is because we went into this lower growth, lower inflation, which tends to pivot the Fed as dovish. So that's why a lot of this data that comes out that is dovish, you see the market shoot up on that news. We believe as time goes on, the Fed is going to continue to remain hawkish and will beat this market down. That's why your fourth quarter, we go into a deflationary, decelerating growth, decelerating inflation model. And because of that, you want to stay a bit more defensive, a bit more smaller in your positioning, especially in those risk assets like gold, silver, silver, platinum, copper. Now, going into gold market returns versus stock market declines, you can see we outlined the various things here, how this is gold in the purple, how it's done against other asset classes in different stock market declines. So, gold is a good hedge in deflationary environments. Fed Watch tool still showing 75 basis points is the favorable rate hike expectation. I did outline some of the performance, the correlation matrix, and also the market volume. Bill outlines in the Morning Express a whole bunch of data on the CPI, where he thinks things are going with that, so I won't get all into it. And then on Forex Factory, that's where you want to look, and you can see some of these key headlines that are coming out. Mine's filtered for just things that are coming out in the U.S. dollar. However, there's many international events like Chinese CPI that could impact the market, but these are the things you want to look at. This CPI, this core CPI month over month, PPI, core PPI month over month, and then these are those University of Michigan consumer sentiment and inflation expectations. That's why I'm taking a lot of these positions off heading into it. Just purely risk management, doesn't take away from where I think long-term Fed pivots dovish, metals take off to the upside. So that's the way I stand. Just want to give you this, sorry it's a little bit more lengthier here, but got some more time here with not a lot going on in the markets. Again, I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. Remember, futures and option trading involves risk of loss. May not be suitable for all investors. You can always call me, text me, 312-858-7303. Good luck, good trading.